Hey, what's up everybody? Derick Van Ness here, and today I want to talk about a really serious topic, something that's front of mind for a lot of people, and that's how do you never lose money in the stock market again? Yes, you heard me right. Never lose money in the stock market again. And when I say that, I mean zero, zippo, zilch. I'm not talking about sort of minimize your losses or do better than the market or any of that stuff. I'm talking about zero losses from now until forever, right? So in this video, I'm gonna take some time. I'm gonna talk to you a little bit about what does the market look like? Why does it go up and down? What's happening with that? What causes that? And then also I wanna talk to you about what you can do to not lose money. So at the end of this video, you should know exactly how to take action. Make sure that you're not losing money ever again, because listen, as I'm filming this video right now, the market is taking a beating, and as I'm talking with clients, they're scared, they don't know what's going on, they don't know what they should be doing, and so I want to address that issue just for you so that we can make this happen. And listen, let's have a little fun with this, right? Let's look at what makes sense, what's absurd, and figure out how we can move forward productively and powerfully. Okay, so as we jump right into this, I just want to acknowledge right up front that the market is volatile. Can you go with me on that? It goes up, it goes down, it does all kinds of things. And the worst part is there's no way to predict it. I mean, as I'm talking to you, there's something sweeping the planet that's never happened before. It's got people in crazy panic. And if you think even those super smart guys way over there in Wall Street know what's going on or how to react to this, or that could even see it coming, you're absolutely wrong. Nobody could predict something like this. And in the past, nobody could predict a tech bubble because tech had never happened before, right? The internet was brand new back in the .com. Nobody could have predicted too far in advance what was going to happen with mortgages. Obviously, people saw once it got too bad that that was going to happen. But the point is, it's going to go up and down. There's going to be factors we don't even know about or consider that can go into that. And trying to think that you can beat those really smart, big brain guys that are from Harvard and Yale and all those fun places on the East Coast where they've got billions of dollars of software. They're sitting in a corner office up in Wall Street just analyzing this stuff. Like, to think that you can beat them without being an expert, to me, that's a little bit crazy. Now, the people who are trying to beat those guys way up in the big corner office are actually getting their butts kicked right now. As I'm talking to you, the market's down. It's been down as much as 9% today. It's down 6% right now. And people don't know why. They don't know what to do. And the average investor is getting smashed. In fact, a lot of the people who are trying to beat those experts are down 20 to 25% on their assets right now. And I want to be clear, like 20 to 25% down for many people is wiping out decades of savings. Like, that's crazy to me to think that one in every $4 that you have is just gone in a matter of weeks. So this is the type of volatility that's happening. And I think the main point I want to make here is that the market is volatile and it's unpredictable, and trying to beat that unless you're a pro is really, really tough. And that's why people hire market experts. But here's the reality. Most people's planner is the person who signed you up for a 401k at your business, or the kid down the street who graduated college and called himself a financial planner because he passed the test, and then he just hands the money over to a guy who hands the money over to a guy who hands the money over to a guy who, you get what I'm saying, till it finally gets to a guy who works on Wall Street, and hopefully that guy has your best interest in mind. But I hate to say it, but he doesn't know anything about you. He doesn't know what you're trying to accomplish. He doesn't know if you're saving for retirement or your kid's education, or you just need some money to buy a boat. Like, he doesn't know what's going on, right? So how could that guy make investments in such a way that they're going to fit your needs? So that's something that we want to consider. And I want to put you back in control as we have this conversation. But it's important to acknowledge, like, there's no control here. There's no knowledge. There's a lot of things working against you. And that's why a lot of people lose. So if you're taking a beating right now, just understand it's not you, it's a broken system. And I want to talk to you a little bit about how that works and how to fix that. And before I even jump into that further, I just want to ask you a really serious question. Do you have the time and expertise to become a pro at investing in something like the stock market? For most people, the answer is no. Almost all my clients are business owners, and they're really good at their business, but a lot of them are in healthcare, a lot of them are in manufacturing or automotive industries or whatever, and they don't have time to be spending hours and hours analyzing all this stuff, right? So I want you to be honest with yourself. If you're not going to be a pro with your investments, maybe you need to look at some other ideas, some things that are outside of what you don't know about and in the area where you do have expertise. So that brings up an interesting point. Almost everybody I talk to doesn't realize that other than maybe real estate or gold and silver, that there's nowhere to invest outside the market. And let's be honest, real estate goes up and down. Gold and silver, I mean, it's almost like the stock market in the sense that most people don't understand it, and when they park money there, they just hope it goes up. They don't know why it would, but they know that they hope it does, and if it does, they make money, and if it doesn't, they don't. So you want to get out of that hoping. You want to get into the knowing that your money's going to go up. Does that make sense? Okay, so I think I'm making a good point here that you may want to consider looking outside of Wall Street, okay? Now, I'm not talking about your aunt's salon or you're starting a brewery with your brother-in-law, bro. I'm talking about investing in things that you know are going to go up, because a lot of those other investments, you're dealing with people that you kind of know, but you don't know anything about their business, or maybe you don't know anything about that type of business, and that would be just as risky for you. You know, you've got to stick with things that either you know about or that have guarantees involved in them. Does that make sense? So let's talk about what does make sense. And I'm talking about putting your money in a place that's bedrock, that's absolutely foundational, that your money is going to be certain to grow. Because that's the key to this whole game. It's not about losing money. Like, what a lot of people don't realize is that 20% that people lost in the market, they didn't just lose that 20%. In fact, I did the math with someone the other day, and if you had $500,000 in the market and you lost 20%, that means you lost 100,000, you're left with 400. You didn't just lose that 100,000, you lose what that 100,000 could turn into over the next 10, 20, 30, 40 years. I think the guy I did the math with, we figured that over 36 years, if you got 6% on that money, it would double 3 times. So it would turn from 100,000 into 800 grand that he would have missed out on because those dollars just disappeared, right? So we don't want to do that. The key here is foundational bedrock stuff that is sure to go up, because if you never lose money, you get richer every year. You don't take those huge setbacks, and I'm going to give you a little bit more detail on that right now. You see, the market runs in cycles, and without getting into a bunch of history of central banking and the Fed and all that kind of stuff, just talking to you a little bit about the fact that there's such a thing as a market cycle, and it's good. Like, we have a boom cycle, and then there's a correction, and just as humans, we have a tendency to push things too high, and then we correct a little too far. And the reason that the Fed plays into that in centralized banking is they put money out into the market so it flows a lot more, and when people are spending money, there's enough to go around for everyone, and then they can see that people are getting a little bit too loose with it, and so they start bringing some of that money back in, so there's a little less money and things correct, and they try and keep it kind of balanced, right? But as we've seen in the past, like, sometimes people take it too far, they try and stretch it too far, and then we end up with these big booms and these big crashes, and so that's what we're trying to avoid here. So there's market cycles. That means the market goes up and the market comes down, and we know that that happens about every 8 to 10 years based on what happens with the Federal Reserve. Now, we had it in 2001, right? We had the dot-com bubble burst and the market came down, and then it went back up, and then we had the 2008, 2009-ish era where we had the mortgage meltdown, and that happened fairly predictably, timeline-wise, with what we've seen with these market cycles. And now here we are in 2020. We're in a bear market, and a lot of people think this is because of what's been going around the globe, but the truth is that it's really a product of we've gone too far with the market. The Fed started pulling some money back in. They started ticking interest rates up, so that weakened the market a little bit. Some other things were going on with corporate buybacks and a bunch of other stuff that we won't get into, but the market was due. Long and short of it, we've gone as far as we can without a correction, without kind of cleaning out the dead wood and putting in better things, keeping the good money, the good companies in business, and getting rid of the bad ones, right? The ones that aren't doing so well, they're just kind of leeching off of everybody else. So that's been happening year after cycle after cycle after cycle. So this isn't anything new. This isn't anything that should have caught anybody off guard. People have been talking about it for 2 or 3 years now, and we were long overdue. So here's what most people don't realize about these cycles. Yes, they're predictable, but what people don't get is that you have a crash and then people are like, oh, the market will go back up. And it's true, but it takes, in most recent times, it's been taking 5 or 6 years just to get back to where you were to start. So in 2000, we kind of had the peak of the bubble from the 90s, right? Everything went up, and then we had the dot-com bubble burst. And that burst and we had a drop kind of over time, and then the market came back up. Do you realize that it was almost 2007, late in 2006, to get back to the same place people were in 2000? So there was 6 years there that was completely lost as far as earnings go, right? So next, after the mortgage meltdown, we know that the market crashed like crazy, and then it came screaming back with a vengeance, but it took until 2011 to even get back to where it was before the dot-com bubble burst. So I just want to give you a summary. It was at one place in 2000, it went down, it came up, and kind of touched the surface in 2006, and went down and came back up in 2011. 11 years later, you were in exactly the same place. Now, that doesn't include fees, that would have been a loss. That doesn't include anything else that you may have done in there. That's just what the market did. So you broke even. They're calling it the lost decade over an 11-year period. Now, if you factor in fees, you lost money. If you just broke even, you could have done just as good in a savings account without pulling out all your hair and going crazy. Obviously, I've done a little bit of that over the years. But the reality is why take all the risk to get none of the rewards, right? The people in the market would tell you that it's doing great, and it's tricky because if you're putting money into your 401k or your IRA, it looks like it's going up, even if it's breaking even if it's going negative a little bit. Like a lot of people were putting money into their stuff in 2018, and in the beginning of the year they had one number. By the end of the year they had more money in there, but the market actually went down 5 or 6% depending on who you ask and which indexes you're looking at. So it's tricky. You're looking at a floating target to know what's happening with your money. So if we want to get back to this bedrock stuff, we want something that we can see what's solid, we can track its growth, we can predict its growth to some extent, but we always know it's going to go up. That's going to get rid of all the pulling out of the hair and gnashing of teeth and all the craziness that can go on out there when we don't know what's happening. Okay, so now that we've made that point, I want to talk to you about where do you look outside of Wall Street? And it's funny because when I ask people about this, a lot of them don't even realize that there's a lot of options out there, right? Like I mentioned, real estate, gold and silver, that kind of stuff. But I'm going to talk to you about what wealthy people do, what banks do with their money when they take it outside of Wall Street, how they've used it for centuries, literally, to grow their money safely, and how to get returns consistently that they can bank on. I also want to let you know that this is what I do personally, and this is what I recommend for a lot of my clients on the front end, is to get them going to build this bedrock stuff. So I'm not telling you to do some pie in the sky stuff. This is literally where I put a ton of my assets, a very high portion of them, and I believe in this 100%. So the first thing I want to tell you about this is when you put your money into the type of accounts that I'm going to tell you about in just a minute, your money has a floor, and that floor is at 4%. So you know, worst comes to worst, everything goes awry, you're going to end up with 4% growth every single year, and that's predictable, right? That's what we're looking for. Also, as that money grows, if things do well, the companies and the types of accounts that I'm talking about, they pay a dividend. Just like a stock or a bond might pay dividends, they pay dividends to you if you've got money in there. And that can increase the amount of money that you've got coming in. Now this varies, it's all over the place. Right now it's somewhere in the neighborhood of 2% with the best companies that are out there. So, 4% plus 2% right now. However, the key to this is these companies have paid this dividend, even though it's not guaranteed, almost 100 years in a row, a little over 100 years in a row for most of them. And so it's almost always coming in. Is it possible they won't pay? Sure. So you get your 4%. But if you can get more than that and participate in the upside when things are going well, that's even better, right? Now, and I won't even get into it, but there's also tax advantages. A lot of this money will grow tax deferred, like what you would get in an IRA or a 401k. Or if you do it properly and you work with some people who know how to use it, you can actually get this money and utilize it tax-free. And I'm not talking about some kind of gray area loophole stuff. There's books and books and books on how to utilize these things. And this is the kind of stuff that financial people do. They make money every day, they participate when the things go well, and they save on taxes because taxes are one of your single biggest costs, probably depending on how many kids you have, but they are just such a big cost that if you can minimize the taxes, it makes a massive difference in what you get for retirement, paying for kids' school, anything else that you want to do to buy a house or whatever, right? So this makes a really big difference over time. And the bottom line is, if you could get 4, 5, 6% every single year, and the market purports that on average it gets about 6%, why go take all the risk? Why not just get something you know is going to earn a very similar amount to what you're going to get in the stock market with tax advantages, and you don't have to pull out your hair. You can focus on your life, on your family, on your loved ones, on your job, on your business, on the things that matter to you, more time with charity or your church or whatever you're into. But then you don't have to worry about spending all your mind space trying to figure out the stock market or some of these other things. So I feel like if you're looking for rock solid, this is the way to go for you. And so I want to tell you about it. And here we go, drum roll. Where do you put this money that you can get these kind of returns? You're going to be surprised by this, but it's actually inside of a properly structured whole life insurance company with a mutual company that pays dividends or is a participating company. So I know that's a mouthful, and what I want you to get out of that is there are some life insurance companies that are great, there are some that are not so good. You want to work with a mutual company that pays dividends, and you want to structure the policy right. Now, the reality is out there in the insurance world, there's a ton of guys who are trying to maximize their commission, and they're trying to minimize your cash growth, and unfortunately, that's given some life insurance a bad name, okay? I'm talking about whole life insurance here. I don't like indexed or variable universal life for the strategy I'm talking about because they don't have the same kind of guarantees. So if you're going to do this, if you're going to even consider this, you need to work with a professional, a licensed professional who understands how life insurance works, how to structure a policy with the mutual company to maximize cash growth. If you do that, you're going to get the kind of results I'm talking about here. You're going to get the 4%, you're going to get the dividends, you're going to know how to take advantage, and they can help you with this, of the tax advantages so that you can really maximize it. And the main thing here is you get to stop riding the roller coaster. I'm going to say that again. You get to get off the roller coaster. You don't have the ups and downs and the stomach aches and the hair pulled out and all the crazy stuff that goes on. There's tons, I'm sure there'll be tons of divorces and all kinds of family fights because the market isn't doing well. Get away from all that stuff. I believe that you can set yourself up. You can make a similar type of return. You can have peace of mind. You can be totally liquid if you need the money for an emergency or an opportunity. And life insurance offers this if it's done properly, okay? So we do that kind of stuff. You don't have to work with us. Find someone who's a pro who can help you with this, but someone who gets the value of the guarantees. This will get you off of that roller coaster and build in the fact that you never have to lose money in the market again. So I hope you gathered that. I tried to really be thorough with this one, guys. If I missed something, please comment below. Let me know. If you like this content, click the little like button. YouTube will reward us for that. It's really good for the algorithm. If you like this kind of content, subscribe, tell your friends, let everybody know. We want to help you get money out of the way so you don't have to deal with it every day, so you can live the life that you're here to live, do the work that you're here to do, and take care of and spend time with the people that you care about. My name's Derick Van Ness. Thanks for watching the video, and I hope to see you on the next one.